Let's get started. I'm going to give a brief introduction, turn it over to our speakers. The speakers are going to be limited to 5 minutes each. I just want to set the stage. First, I want to say this is an informal discussion. It's just really to get everybody to sort of get used to hearing some of the vernacular that you're going to hear thrown, to understand some of the terminology, to understand that we do have a team. And the team is actually growing in knowledge and in personnel. I would say that, I caution to say that we're expert in this area. There's nobody that's expert, okay? Because the area is growing so quickly and coming at everybody so fast that I would really couch that and say that we're probably as knowledgeable as anybody in the marketplace. I would say that we're leaders in the marketplace today, but there are a lot of people, have a lot of resources, and I'm certain that they're going to get as smart as we are pretty quickly, and probably in many aspects and areas be able to pass us. And I'll give you an example. I would say that we were in the metaverse before Facebook was in the metaverse. And then all of a sudden, Facebook makes an announcement that they're going to invest $50 million in becoming a metaverse company. And why is that important for Facebook? It's important for Facebook because, number one, I think everybody knows that young people aren't really running to Facebook. And number two, Facebook is a platform. And if the social platform moves from the internet to the metaverse, they sort of leave Facebook behind. So Facebook is sort of scrambling to figure out what they look like in the future. And lo and behold, they only announced a $50 million investment maybe 3 weeks ago. And 3 weeks later, they decide just today or yesterday that they're changing that investment to $10 billion. Okay, that's a little bit more than we have to invest in the area. But having said that, at 50 million, they had going to hire 10,000 people to investigate the metaverse. I can't even imagine how many people, $1 billion or $10 billion or whatever it is that they think they're going to spend. But you can see that there's a lot of money being poured into the future of crypto, of blockchain, and of the metaverse. Just to give you a quote, Facebook believes that this is going to be a social and professional place in which people live their lives. Okay, it's going to be a virtual reality. And they don't just emphasize the social, they emphasize the professional. Okay, and they believe this is going to be for social and professional use. Nike, if you go on the Nike website, you will find that they are advertising jobs for people in the metaverse. They're looking for metaverse. So those are two different ends of the spectrum. And what you can see is that people are really, they know that the metaverse is out there and it's happening very quickly. Now, what do I hope us to gain from this conversation today? I hope that we'll all understand who the players are in our firm, that we have knowledge, that we can talk, and that if you see or hear opportunities, that you should get them to the right people. I would also like you to think about what opportunities exist in your client base. Think about what your client has that could be moved to the metaverse. Okay, and then let's talk a little bit for me about things like cryptocurrency, right? So Bitcoin was launched in 2009. Okay, it's a blockchain based currency. In the beginning, most countries didn't recognize it. Now the list, I wouldn't have time today to list the number of countries that recognize not just Bitcoin, but all cryptocurrencies. I believe that there's a couple of states out there that you can pay taxes in cryptocurrency. There's countries that are now saying that that's going to become their currency. There are many countries that are creating their own Bitcoin. So those are things that you need to be aware of. There are many tax concerns. We don't have all the answers, but I can tell you that people are subject to tax on these things. So it's not just something out in the world that escapes tax. there are contractual obligations. And I hope that through this conversation and these presentations, we're going to try to touch on all of these areas. And I think that when we get to a little bit of a panel discussion, we've had a few of them just amongst ourselves, and they get pretty exciting, and most of it goes over our head. And if I can, I'm going to try to be an interpreter of this and put it into lay terms for everybody, because believe it or not, Brian and Jerry and Gabe tend to talk up here in what I would call the metaverse. And sometimes it just needs to be boiled down to what does it mean to us. But I think they all know and understand that we're going to try to keep this as metaverse and cryptocurrency and digital assets 101. So with that, you know, let's go back to the beginning of the slides, if you don't mind, Allison. Okay. Okay. So let me just let's pass introductions. Now, here's an example of some of the companies that are currently in the metaverse. Okay. And you'd be like, why would Sotheby's be in the metaverse? Well, in the metaverse, many auctions are taking place as NFTs. So that's an example. So let's go on, and I'm gonna introduce, I believe, Jerry at this point. Yep, okay. Jerry's gonna go over some of the terminology because he was a English teacher and has in English, so I thought he would be appropriate for those of you that don't know. Go ahead, Jerry.
All right. Well, cryptocurrency is pretty obvious what that is. Basically, we've got the Bitcoin. We've got so many different crypto types of crypto that it's unbelievable. You know, everybody knows Bitcoin, Ethereum. There's Mana. There's just so many different types, and there are different blockchains as well. And they're for different reasons too. So like, for instance, Decentraland, I'm gonna jump for Decentraland right now. So on Decentraland, because the first three are very well connected. Decentraland consists of basically two different tokens. One token is actually an NFT, which represents a parcel of land, literally. And the other token is a cryptocurrency, Mana, which is used to purchase land. So as crazy as it sounds, Decentraland is basically just two things. It's land, which is an NFT, and also another crypto asset, which is actually equivalent to money, which is Mana. That's how you buy the land, the NFT, with Mana. And the land NFT, the land is an NFT, which is a non-fungible token, meaning it's unique. And the Mana is like a dollar. It's totally exchangeable. It's divisible, all that kind of stuff. So, you know, that's why this gets, it's kind of like you try to simplify it, but it's not that simple, you know? So, because
let me just, so for the hearing impaired, okay? Yeah. NFT is basically a certified contract, smart contract. Mm-hmm. It lives inside a blockchain, right? And Decentraland is a real place, okay? It's a real virtual place, but it's a real place. It's just like New York City, only it's Decentraland. And when Jerry says you can buy land there, you can buy virtual land there. Go ahead, Jerry.
Mm-hmm. Okay, so and so now when you go to buy land, there's a fee, which is gas, and that gas fee basically is a fee to record something on a blockchain. These miners just don't do anything for nothing, and it takes a lot of energy. So it's a combination of the energy it takes and the fees that the miners would want, and the gas is paid in. So Decentraland, it runs on the Ethereum blockchain, and when you buy wearables with Mana or land, or when you transfer it to a wallet, which we'll talk about, there's a fee for that. It could get very expensive. It's called gas, you know.
All right. So
go on.
I'm going to jump in there again, right? So
yeah,
so gas is essentially a utility, right? When you exchange $1 at the store, There's nothing in between you and the person you're giving the dollar to. But when you use a credit card, there's a fee because there's somebody that has to do a lot of other things for that transaction to complete. And
Yeah.
in the NFT world, that's what gas is. It's that fee that would be charged on a credit card. And some of it's for the cost of the transaction, and some of it is actually the cost of the utility. You see, when you work in the virtual world, it takes electricity, seriously, real electricity, kilowatts, okay? And they mine for those kilowatts. So in the old days, they mined for coal. Today, they search the world for the cheapest places that they can buy energy. And things like Bitcoin cannot be exchanged without electricity. So that adds to the cost of any transaction. Okay, go ahead, Jer.
So, and which is actually interesting because even though there's a gas fee, but the big difference here is that there's no middleman when it comes down to it. You're going from person to person. So there's no bank involved in a sense when I buy something from somebody else. So you're paying a fee, but there's no middleman, which brings us, I'm going to skip the land because we already know what land is. It's an NFT. So which brings us to something called a DAO, Decentralized Autonomous Organization. So what that would be literally an organization where there's no central government. Nobody's in charge eventually. So it might start where somebody's in charge, but they'll end up tearing up the program. And then all of a sudden there'll be a program that allows the owners to vote. There'll be a mechanism, which is basically a smart contract that will allow the members to vote on what they want. So for instance, there's something called Rocket. It's a DAO, a decentralized autonomous organization. So the members or the owners, the token holders, will decide on which NFTs to buy. And there's a whole mechanism where you will vote and the community as a whole will decide what to buy. It's automated. Of course, the world might end one of these days with with somebody dropping a bomb on one of these things. But other than that, it's all automated and smart contract. So there are some issues with this. Perhaps it could be an SEC issue, but that's what this is, a DAO, and it's going to get more and more popular. And there's many different types of DAOs. I don't know if anybody has any questions on this or what's next.
We're gonna have questions at the end.
Yeah. I mean, I can go further on some of this stuff.
Go ahead, Jerry.
Okay, so digital wallet. A digital wallet is, so I don't know how many people have digital wallets, but basically let's just say you're not familiar with crypto and you had an account at Schwab. It would be like transferring your stock into out of Schwab and into your own pocket, into your wallet. And like there's a wallet called MetaMask. That's the most popular one. And that's how things are transacted in the metaverse. And actually on all these sites where you buy NFTs, it's a browser attachment. And you would click on an NFT you'd buy, and they would see that you have money in your wallet, which is like your pocket. And then you buy the NFT, you transfer the crypto would come out of your wallet, the NFT would go into it, and there'd be a gas fee. And that's what a digital wallet is. And I mean, and you literally, you can see your NFTs on the digital wallet on your phone, it's not even geared to see it on your computer yet. Now, aside from digital wallets, I'm doing this fast, a digital wallet will have a key. It's a very complex key. If you lose your digital wallet, you're dead. The money's gone. That's the other thing here. So it's very important to have, it's very important not to lose your code to get back into your digital wallet. And it's a very long code. And people do lose it. There are people that have lost millions of dollars by losing their wallets, trying to remember the codes. And there's also like hard wallets where you can move the money off the internet, and it literally on a hard disk almost. And that's pretty much that. That's how things are really transacted through a digital wallet. It's not like it's going from Coinbase, you would transfer into a wallet, and then you would buy these crypto assets. So we talk about exchanges. That would be a Coinbase type exchange. And also, and I guess there are exchanges like the exchanges where you'd buy NFTs. Those are more platforms where you'd buy NFTs. Like there's Rarible, there's OpenSea. So basically the way it goes is it goes from Coinbase or some kind of an exchange into your digital wallet, and then you would buy something on a platform. One more thing on NFTs, whereas like people need to know they're kind of certified by just the contract itself, the smart contract, which is below. So whereas like, I'm just going to jump around here. So whereas if you had a work of art or something, you would have an expert verify the provenance or who did the painting. With an NFT or a work, that kind of, it's already built into a smart contract on a blockchain. So I know it's a lot to go over here. So, and I see there's a note here about no intermediary in a smart contract, because there is none. It's just between two parties. So you can see there's a lot of middlemen being carved out in everything here. It's peer-to-peer, there's a community, and the centralized authority basically is dwindling. And everything's all the profits being squeezed out of everything, and it's person to person almost. And the community. I mean, I don't know if there's anything more.
No, that's pretty good, Jer. I mean, you're going to hear everybody on this panel use some of these terms, and so we thought it would be good for you to at least hear them once before we got into a conversation.
Okay.
What I really want to point out is that everybody thought, gee, what's the future of an accountant once there's a smart contract and a blockchain? I think that through this discussion, you're going to see that there's certainly a future for a test function and tax function and an accounting firm in the new world. And certainly advisory services. And a lot of this definitely falls into the advisory service area, because our clients will really need a lot of advice on navigating these new markets. So the first person that is up is Brian. Everybody here, I believe, unless we have some guests, know Brian. Brian Goldblatt is a partner in our test area. He heads up our digital media group, and he's going to tell you just how fast and furious opportunities are. So Brian, why don't you step in?
Yeah, thanks, Glenn. So yeah, as Glenn mentioned, I lead our digital assets practice here at the firm. And I'm also an audit partner. And when we talk about digital assets, everything from blockchain, crypto, distributed ledger technology, DLT. And I just want to take a few minutes to talk about some of the things that we're doing here in the space. When you really think about DLT and distributed ledger technology, it really is one of the greatest inventions of our time, comparable to the internet. When you think about DeFi and decentralized finance and IoT, Internet of Things, it's going to change the way we live and do business, as Glenn mentioned. So, and I know Jerry went over some of the terms, but I did do a seminar about a week or two ago. So if anybody's interested in listening, it's an hour long. It should be on demand. And I expand on some of the things that Jerry was mentioning and talking about blockchain and cryptocurrency. So I want to just talk about some of the industries that we're working in right now. One of the industries that we're working in is in real estate. So Aspen coin, actually the largest real estate tokenization in the US was the St. Regis Hotel in Aspen, and that's an audit client of ours. And I think the real estate tokenization market is really going to take off. I was talking to somebody else, a client of another partner at the firm recently, and she's planning on tokenizing a bunch of real estate properties. So I think that market is going to be big in the near term. We're also in the financial services industry, so working it with investment companies, hedge funds, traders, exchanges. We audit one of the largest exchanges in the world, the most innovative, FTX. I'm sure you've seen their logo in the World Series and on the umpire uniforms. They actually did a recent round of financing. They had a capital infusion of about 400 million that was valued at around 25 billion. So they're a pretty big company and player in the space. We're actually also in the technology space, working with companies there. We have one company, Anthem Holdings, who they actually pivoted their business, and now they've created a token for data security, which they think will be huge. Arts and entertainment, obviously NFTs, which is the topic that we're talking about today. Seeing opportunities there. Actually, we recently got a opportunity for an NFT, which is one of the top, I would say, top 5 or 6 NFT projects that are out there. So that came to us through another partner at the firm. And I think the sentiment is, every small or medium-sized business within the next few years is going to have an NFT strategy. It's going to be commonplace, just like apps were and apps are now. Making a reservation on a restaurant or a membership or a discount. That's really, I think, the way the world is going. I was talking to somebody recently who's in the not-for-profit space, to potentially work with them. We actually work with miners, which Jerry and Glenn were explaining what those were. We actually have mining companies that are clients of ours. Manufacturing, I was involved in a project for many years in terms of revolutionizing the supply chain. And I think that blockchain and crypto is going to have a big impact on the supply chain and manufacturing and distributions. Same thing with healthcare. And then like Glenn and Jerry mentioned, just on our business, accountants, auditors, it's going to have a significant impact on what we do and how we do business as well. So we're in the space. We're doing a lot in the space. I would say we're leaders in the space. In early 2020, we really started from ground zero. Right now, we're probably approaching $1 million, which we'll hit by the end of the year. And on top of that, we have a number of proposals that are out there and opportunities. I think we're getting calls at this point weekly, sometimes multiple times a week. There's at least 6 or 7 things, a couple that I think we'll get signed engagement letters for this week that are out there right now. And then obviously others. And I think the advantage we have, I think the expertise we have, we have significant expertise. I've been involved in this space for a number of years. I'd say 6 or 7 years. In addition to my day job, I've spent time in this space, and then now is the opportunity where I'm able to combine what I'm doing in business to the space. I think, like Glenn mentioned, other firms are going to start to come in. They already are. One person said, we didn't really want to get into this space, but we realized that we have to. And I think that's going to continue to happen. And I think they're saying that not only because of the market, but just because it's going to impact every business and every industry eventually. Stuff is very, very complicated. Even on some of the audits that we're doing, we're going into the blockchain. We're looking at how transactions are happening. We're really getting into the details and the nuances. And not many people can do that. So I think we have an advantage there. I also think that our contacts, if you look at some of the clients that we're already working with, which I named a few, as well as just friends and family. I mean, it's very, very significant what we have. And, Glenn mentioned Facebook, which has put a lot of money into the space, but there are a lot of big companies that are already in the space in various different capacities. Some of the companies, Amazon, MasterCard, IBM, Square, JP Morgan Chase, Goldman Sachs, Tesla, MicroStrategy. So some of those are actually public companies. And I think the key will be really regulation. And, as we see more regulation, that will really help drive the space and validate the space. And I think that's needed for long-term sustainability. If you think about the SEC chair now, the new SEC chair, Gensler, he taught crypto at MIT. So he's familiar with it. And, right now the talk on the regulation side is stable coins, but I'm sure then it'll move to other things. So it's complicated, it's fast paced, it's moving, it's changing every day. There's so much happening. The space touches so many different things, and there's so many different things involved, whether it's, crypto, NFTs, etc. But all good and exciting things that we're doing here.
Brian, thank you. I want to try to bring this a little bit down to the most basic conversation that we have at the firm, which is something a service or a niche? And we go back and forth, and we have some of these entities or areas that we think are both. And digital is one of those areas because, as Brian said, we have digital clients like mining companies, but we also have a service which is being provided to all of the industries that we service that want to understand how they enter the NFT market. So Brian's in a unique position where he's out there selling as a niche, but he's also supporting all of the partners here in the firm on their clients and their exploration of the virtual world. So I just want you to understand that. Anyway, the next one up is Michael Williams, and Michael has really shown an interest. And I say an interest because you don't come out of school having had a lot of classes in digital taxation, right? The book hasn't been written yet, and we're trying to know as much as we possibly can about the tax issues. And Michael's as close to an expert as we get, and he probably has a lot more questions than answers. Okay, I want everybody to understand that. But he's going to talk a little bit about some of the basic tax issues surrounding this virtual world. So, Michael, why don't you go ahead?
Sure. So, as Glenn said, yes, the tax area is a little complicated for the crypto world. The IRS in particular does not treat cryptocurrencies as a currency. It treats it like property. So the same rules that apply to other types of property also apply to cryptocurrencies, which sometimes are good and sometimes are bad. One of the biggest areas for individuals, and I think that's where we can come in to help advise our clients, is a couple of years ago, the IRS started to ask a very, very specific question that had to be answered yes or no on people's individual tax returns, referencing if they had basically an interest in a cryptocurrency. It's a very, very important question. The IRS is focusing on that answer. And that's where we can come in to help guide our clients to make sure that they're being compliant with the disclosures of those and their transactions. One of the things that's potentially, probably not yet today, but possibly in the future, that can be troublesome for some clients is if you're to go to, say, a local Starbucks and buy a cup of coffee and use a piece of a Bitcoin or other currency, that is a taxable transaction to you. And that's where some of the confusion lies. People think that if I use my cryptocurrency to buy something, it's just like using, currency, a check or cash or a credit card. It is not. You have to look at what the fair value of the asset being given up versus the fair value of the asset being received, and determine if there is a gain or loss based on what you paid for that original cryptocurrency asset. So it does get to be a bit complicated, and that's where record keeping for people gets to be very, very, very important to track these things. Unlike our brokerage accounts these days, where the stockbroker gives us the cost basis in most cases of a sale of a security, in the crypto space, there isn't that capability yet where you're getting that kind of reporting. So it's up to our clients and to track that and us to advise them. Recently, there's been some focus coming out of legislation in Congress where, who's going to be reporting transactions. And it seems that a lot of people that were working with crypto assets are going to now have to report transactions on a form 1099K potentially sooner than later. And that's going to lead to some, additional compliance issues for people. This is a new space, a new area. There's very, very little guidance. There's a couple of IRS, documents out there about the space and how certain types of transactions, their position is and how it's taxed. But it is an area that's evolving and changing every day. And, the biggest takeaway is that just to realize that if someone is operating in the space, that the transactions are more than likely going to be subjected to some form of taxation, whether it be at the federal or state levels. And, it's something that requires, a lot of due diligence and a lot of being proactive to make sure you're keeping up with it.
Yeah, that's pretty good, Michael. If I can again try to interpret something, imagine going into Starbucks and paying for a cup of coffee with a share of Exxon stock, right? So a cryptocurrency is traded on a market, and it's not just like paying with a dollar bill. And it presents a whole other set of issues. What did you buy that for? Did you have appreciation? On and on and on. So just keep that in mind. I believe the next person up is Jerry again. Are we up to you, Jerry? I've lost my screen, sorry.
I think I kind of went. I can go back and talk a little on this.
Well, I want you to talk a little bit about your journey into this area.
Sure.
Some of the complexities, some of the challenges.
Well, I will say it's the accounting is a nightmare in this world. It really is. It's because you're dealing with regular money, then you're dealing with wallets, multiple wallets that you have to you're dealing with multiple wallets. First of all, you're dealing with an exchange. You're transferring into a wallet. Then you're paying people in crypto. You're getting money in crypto. You're getting money in several different wallets. You're going to various blockchains to try to figure out what happened. So this all relates to what Michael was saying, what Brian was saying. Just the accounting itself on something so simple, this banquet business that we have, it's complicated because when you do a transaction in crypto, it's already changed the value. 30 seconds later, your crypto value has changed. And to see what you actually spent, it's almost gone. You don't even know what the original basis was, because unless you actually almost take a screenshot. Because even when you go into the blockchain to see how much your original cost was, you click on something and says, oh, this is the estimated cost at the time when you did the blockchain, when you actually did the transaction. So it's actually, you can't even get to an actual number sometimes on the cost of the crypto to begin with, and then if you pay somebody overseas in crypto, well, maybe you should have withheld, maybe you should have gotten a W-8 BEN or something. So what people don't realize, oh, what about 1099s to an artist? Artists don't get to, an artist doesn't want a 1099, doesn't want to give you a social security. The one thing I really learned is the one good thing, I think artists are going to make a lot of money in this world, but at the same time, you have to pay them, you have to give them a 1099, and that kind of stuff. And then it's also hard transferring an NFT from one wallet to another. And then you pay the gas fees and all that. So, and then also finding lawyers that know the space and professionals that know the space. So these are the kind of problems that we ran into. Yeah.
So Jerry, that's a great lead in for Gabe. So Gabe, why don't you talk about some of the issues that you see on the horizon and some of the conversations some of your attorney peers are having and contractual changes and things like that.
Well, let's just go back and talk a little bit how things are changing quickly. In 2 months early this year, there were $250 million worth of transactions on the NBA's site, if you will, selling NFTs to 100,000 people. That's the dimension of what the transactions are. And that speaks to issues of valuation alike, because if there's scarcity and NBA is selling the magic moments, if you will, the highlights, as opposed to other classic highlights, if you will, maybe NBA championship games, maybe the game when Willis Reed came on the court. Who owns those rights? Who gets those? Does it increase the value of franchises? How does it impact? And again, I have more questions than answers. There aren't a lot of answers to this area. If I create a work of art in an NFT, I still own the copyright. If I sell you the NFT, you may be able to reproduce it or not, depending on what's transferred to that or not. But again, one example I heard recently of somebody saying, if for the Beeple's work that sold for $69 million, that was sold, but somebody could that could be reproduced, but it's not the same as owning the Mona Lisa if you have a reproduction. So again, what that means or doesn't mean. What I'm viewing this as is, what do you own and what do you not own? And the questions we need to ask our clients: how should they buy this? How should they buy the asset, if you will? To Jerry's point about being in the being able to go from one wallet to another, should they buy it through an LLC? Will it give them asset protection? Will that be able to take fractional discounts on those assets and be able to share them among family members while fractional discounts still exist? Glenn, you mentioned before avatars. If you're a famous actor, while you're alive, you can certainly license possibly your name and likeness as an avatar. In certain states, you have rights to go on beyond death. What do I do if I own an NFT and it's highly volatile, and I leave part of my estate to my spouse, and my spouse has an ability to elect against the will? What can happen? If it's a non-income producing asset, I'm forced to sell it. Where do I sell it? How do I sell it? There are issues if you're selling it at auction like Sotheby's. There are different charges that get added to that. The value goes up. If it's sold for $10 million, you got to add 10% as a fee to go on that. And that's a fee that increased the value. So even though you don't get the money, Sotheby's paid by the buyer potentially, its value in your estate is $11 million. The issue of guiding clients of how to own it, updating plans, making sure they have executives who are familiar with digital assets. The loss that was referred to earlier of losing something and you're out, when was it lost? When do you take that loss? Do you take it before death, or use the executive find it and say it's not included in the estate? We bought it in the last 3 years for $100 million, but I can't get access to it. Do we take a loss in an income tax return, or do we take it on death? There are issues that there are no answers to yet, and there is challenges we face in our own valuation group as we value these things, to the extent that it falls within something we can value. What happens there or not in terms of valuation? This is a highly volatile asset, and one of the advisors I've spoken to talked about making sure you keep a log of the value of your assets so you can show how it fluctuates. We faced challenges before with art. It doesn't move as a class. Different kinds of art, NFTs, can move in different directions. So again, tracking that helps. So there are no great answers other than the fact that knowing more about your clients. We've been looking with the reduction in the estate tax exemption as liquidity of clients. Do they have enough money to pay the taxes that may be due on the second death, if in fact there is a reduction in the estate tax exemption? What do you do when you have such a volatile asset in your estate? What do you do with it? When do you dispose of it? How can you dispose of it? Can a charity hold on to it? What does it have to do to get rid of it and the like? There are all sorts of issues that pop up. There aren't a lot of answers, but there are many smart people starting to ask questions. And to your point, Glenn, there are very few attorneys who are doing work in this area, but there are some that are holding salons, if you will, where experts can attend and sort of trade information. I'm going to start looking into those.
I'm going to bring up three simple areas here. Let's talk about the traditional world versus the virtual world, and let's add some of Jerry's vernacular, right? He
Mhm.
talked about land.
Mhm.
In a true sense, we would normally hold land in a separate company, right? We
Mhm.
wouldn't expect an operating entity to hold that land. And so those questions have to be asked. Let's talk about something. I don't remember whether we added this to the term or not, but the key to the wallet, right? So if you open a wallet, it's protected, right? And no one else has that key. And so if you die and nobody has that key, nobody can ever access those assets. So the question is, and I don't have an answer to this, is the key put into the will, right? So that at the point of death, somebody else is given that, or do you give that to somebody now, or there are companies that will hold those keys for you, and I assume they have a second person that they would pass through legally upon death and things of that nature. But if your clients are setting these wallets up and putting assets into them, I hate to tell you this, but if they forget the key, or the key is lost, or it doesn't transfer, those assets are gone. And you could be talking about millions and millions and millions of dollars. Nobody can ever get into that blockchain.
But a couple of points, Glenn, in terms of using separate entities, you can separate management from ownership. So if I created an LLC, I don't have to go back to the blockchain to change ownership because it was bought in an LLC. And then I can transfer economic interests to various different people, but I can retain management to the LLC. That's certainly a possibility. And the other question you related to in terms of sorry, I just lost my train of thought, saw a pop-up. But as one looks at who should be your executor, having your brother-in-law as your executor because they're knowledgeable. If your estate is predominantly digital assets, just like people who are authors, writers, and the like, songwriters, they often appoint intellectual property executors whose focus is solely on managing those assets. If you've got a lot of digital assets in your estate, fine, you may want to appoint a separate person. This area is getting so interesting that there's talk of putting deeds on blockchains, even estate planning documents in the blockchain, so you can find them, so wills don't get lost.
Yep. So
Yeah,
let's
and-
title, all kinds of things will eventually wind up on the blockchain, right? So let's just think about when you go to DMV and you have to bring the title with you. Okay, well, believe me, it would be a lot easier if that title was in an NFT, if it was in a blockchain, right? And it just transferred to what you wanted to transfer it to. But let's introduce Matt. I believe that everybody here has met Matt in the past, but Matt Bond is our partner in Banquet Labs, and I'm going to just turn it right over to Matt. Go for it, Matt.
Awesome. All right. So our next project undoubtedly needs to be tokenizing Jerry's daughter's marriage certificate on the blockchain. So let me know how I can help with that, Jerry. But
It might wait, Matt. It might transfer a few times.
Nice guy.
Fair enough. But yeah, thanks for having me, everyone. It's really exciting to connect with everyone here. I'm gonna dive into a couple updates on our end here at Banquet Labs. We are, as Jerry and Glenn will tell you, we are as busy as one can possibly be. But just wanted to really quickly just kind of touch on one thing that I guess two quick things that were brought up here. One is the land component that Jerry had mentioned in his terminology section. So we have a pretty sizable holdings of land in Decentraland. Decentraland is the first kind of functional metaverse that exists in the NFT space. And just, I'm sure this is probably going to come up in the Q&A, so just want to kind of nip this in the bud. Obviously, Decentraland is a platform, but in this new paradigm with the metaverse, the way platforms work, they operate a lot more like real estate than they do like traditional digital platforms. So you see Facebook is going to come in and start their own metaverse, or Epic Games is coming in to start their own metaverse. But all of these metaverses are scarce by design, meaning Facebook can't feasibly capture the entire market on Facebook's metaverse like they used to, because one of the most important characteristics of these metaverse platforms is that the users own them, right? So there's only a set amount of land in each world, So the way that it's going to work, what most experts are basically predicting is that, there's another platform called Sandbox coming up. Decentraland is the first platform, and Decentraland will kind of be more like a New York, whereas Sandbox will be more like a Chicago, for example. So it's not easy to populate these metaverses, and so we made a pretty substantial investment in a land estate in Decentraland because it's really, as of today, the first and only viable metaverse virtual world in the metaverse right now. So that's one, and then two is before we jump right in is I have a really strong belief that towards the end of this year we're going to see another large jump in the NFT market and just the total volume of sales. And the reason for that, something that you guys should all check out, is that Coinbase just announced that they're going to be releasing their NFT marketplace at the end of this year. And already, as of right now, there are more people that have signed up to join that waitlist for Coinbase than there are total wallets within OpenSea. So OpenSea is the largest market. OpenSea today is like the Amazon for NFTs, and Coinbase has already surpassed their total number of wallets to sign up for their marketplace, even though they haven't even launched yet until December of this year. So a lot of growth in the space, and it's really only projected to continue on that route, at least in the short term, with the release of Coinbase's marketplace.
Matt, can you talk a little bit about what Banquet Labs brings to Prager Metis?
Yep. So Banquet Labs has gotten off to a pretty fascinating start. We are working with a number of different Prager clients. Our next release with a Prager Metis client is with actually Bruce's client, Aluna Francis, who's most famous as an artist for Aluna George, from Aluna George. She just performed at the Metaverse Festival, which was the largest music festival for held in the Metaverse, really the first music festival held in the Metaverse. And Decentraland, it was held on Decentraland's property. We were able to facilitate a free NFT drop that the platform paid for, which was her first. And then coming up, she has her biggest auction this Saturday. Actually, tomorrow, if you guys are around at 2 o'clock Eastern, 11 o'clock Pacific, Banquet was able to facilitate an interview with Twitter on Twitter Spaces tomorrow. So she'll be getting interviewed by Zora, which is one of the largest marketplaces in the NFT space.
Allison, excuse me a minute, Matt. Allison, can you flip? Go ahead, Matt.
Oh yeah. So that's really exciting. That's our next drop, which we're really excited about. We actually have 4 drops coming up before the end of the year. I guess what we're about to play right now, it was our first drop, which was really a test case that NASA gave us to do their first metaverse NFT drop. It was a collection of wearables that paid homage to Apollo 11. So we released it during the anniversary of Apollo 11, and it went well enough that they actually gave us the rights to use their around 12 of their mission patches for future drops. So our biggest drop, which is going to come out in December, is going to be for Project Gemini, which was similar to Project Apollo, was one of NASA's biggest kind of missions that they facilitated. We're going to be throwing that with MetaKey, which is one of the largest NFT projects in the space right now, and we're expecting that to be our largest kind of windfall in the profits. But what you're about to play, Glenn, is our first kind of pilot run that we did, which earned us the right to future NASA business. So
Yeah, I don't think we have the time right now to play this, but we basically did a lunar landing, and we had avatars of Buzz Aldrin and Alan Shepard coming out of the Apollo landing and making their famous landing in the virtual world. And just to really bring this into English again, those wearables that you see in the first slide, and in fact, the Luna headphones that you're looking at are all virtual. Okay, they don't exist in the real world. They're virtual, and they're for avatars, and people are willing to spend a silly amount of money for things to dress their avatars in, and a good bit of this selling has to do with strategic plans that Matt is really good at doing, and bundling sort of a wearable or a virtual product with a real product, and that access to that artist. It could be a real wearable in the Luna space. And I don't mean Luna, I mean Luna as in the moon. So it's pretty
Yeah,
funny.
and what's
Luna-
interesting actually about our next NAS drop and why it's going to be a really interesting experiment is we're actually tying it. While it is predominantly a virtual wearable, we're actually going to be tying it to physical jackets that you can purchase. That you can actually that will be shipped to you if you purchase the virtual. So these virtuals like wearables there's a massive market for it. Obviously, as you know, the virtual fashion world is over a $30 billion market. According to Statistica, but there are companies that are starting to peg physical like clothing and manufacturing along with these virtual wearables. So it's an interesting time, and we're trying to stay on the cutting edge. So we'll see how that goes, but it'll be a cool experiment.
Okay, so you want to flip to the next slide? This is where I believe we scheduled to sort of have a little bit of a panel discussion between all of these folks. What do we have a time check on this? Is this going to expire in 6 minutes, or did we have longer?
No, you can speak. I think that there's no
Okay.
timeline.
So I've had the pleasure of sitting and just listening to all of these folks you just heard talk to each other, and it's kind of interesting to just listen. It's you know, some of it goes a little bit over your head. Some of it is interesting. Some you pick up some lingo and language, but I would love to just get everybody that was just speaking before we go to Q&A to just answer a few questions, or I'm just going to hit you with a leadoff question, and then you guys can talk amongst yourselves. But talk a little bit about the velocity. How quickly is this happening? Brian, you want to hit that?
Yeah, sure. I mean, it's so if you think about it, the space has been around for since 2009. I think the first Bitcoin was mined, you know, but it's been evolving pretty quickly over the past, I would say, couple of years. And in terms of how quickly things are moving, I mean, it's pretty much every day things are changing. So like even some of the things that you brought up, you think about cryptocurrency, but then you also have stable coins right now, which you know are really coins that are pegged to an underlying asset like the US dollar, like a tether, right? And that's what I mentioned is the focus of the government and the regulation, right? You mentioned cryptocurrency being adopted by countries, but China has actually created its own digital currency, the digital yuan. The US is a little far behind because it's still in the research and development stage, but these kind of things are happening every day. And it moves very quickly, and the technology itself actually moves very quickly too. So an example, you know, we talked about Bitcoin, which is on the proof of work validation model, which means that you need computing power to validate the coins. The miners get rewarded, but then there's also proof of stake, which other blockchains are on, which is really based on the amount that you're holding, and then there's proof of authority and proof of reserve. So it's even the current existing models are actually changing every day, and the underlying technology itself is changing every day. So there's a lot happening. Like I mentioned, DeFi, decentralized finance, the way we do business. We mentioned cutting out the middleman, and that's really essentially what it is, using smart contracts to govern these transactions. It's really going to change a lot. It's really going to change a lot. And this stuff, you know, when you think about decentralized finance, yield farming, staking, like these are significant things that are just going to revolutionize the financial services industry. So, and that technology is changing every day. So it's very fast paced.
Matt, do you find things changing quite as quickly?
Oh, I mean, it's pretty remarkable how quickly things are changing, and it's not even just that things are changing quickly, but like the amount of information that you have to then absorb as things change. Like, for example, now people are starting to, the next thing that's coming up is called fractionalization. So you can buy a CryptoPunk, which is typically like $1 million. You could everyone in the firm could chip in, you know, $5,000 here, $10,000 there. We could collectively purchase a CryptoPunk, and then each of us would get what's called ERC20 tokens, which are basically like equity in a single piece of of an NFT. So the amount of liquidity now that can now purchase these larger pieces through collective buying is like that just came out about a month ago. And it's like, not only is that moving quickly, but just the amount of information that you have to absorb now about how that works, like understanding like the processes, what to do and what not to do. It's not even just a matter of reacting to the market, but also like learning and absorbing the market. It's pretty remarkable how quickly.
And let me jump in about demand, because it's like, I try to learn about DAOs on the internet. I listen to somebody, I sent him an email. He calls me up, he says, we can't find an accountant for our mining operation, you know? And then sure enough, now we're handling their mining business, and they're getting phone calls, and they need help even with their leads. So now we're working with these guys. There's such a demand out there for this. And it's just from me listening to somebody in the internet. I thought he was the expert, which he is, but like, you know, it's not enough out there right now. There's not enough resources to deal with the demand, I think. You know?
Yeah, and you know, like Matt, it's interesting you mentioned on the tokenization, because that's essentially what we're doing in the real estate. And like I said, we're our client's one of the largest, you know, real estate tokenizations that have been done. And now it's hitting the NFT space, like you said. So it's, that market is getting big, and I see it, and I'm talking to people all the time. So I see that happening, and it's so intertwined. A lot of stuff is very intertwined, and that's why it changes so quickly. And even some of the topics that we talked about right now, like on the tax side, it gets way more complicated, because we haven't even talked about forks, airdrops, any of those things, which are, you know, hot topics, I would say, in the space. So like, I think some of the questions we brought up today are really at the high level, but when you really dig into it, there are a lot more questions and a lot more discussions that, you know, and considerations that we need to address.
You
There
know,
was a
Jeremy
question
and Brian, can you guys talk a little bit about the client that you just proposed on?
Which one?
I think, Brian, I think the crypto, the one that's on the top 5, probably. I think Glenn's referring to the one that recommended. I don't know where we are with that, but Brian and I.
NFT.
Yeah, the
Yeah,
NFT.
the NFT. Yep.
I mean, I could start, Brian. It was just what I found really interesting is that it's a very well known. They're in the top 5 probably. They sell for, I think, like 8 ETH is their floor price, which is like $30,000 for one of these, and they have thousands of them, and they're making an absolute fortune. But what I found interesting was that they have a regular business. It's an LLC. They're getting crypto. They're converting it immediately because they can't deal with it. They're paying. And there's payroll all over the world. I think artists in many countries. They're paying a service in the U.S. called, I think it was Dealbook or something, to do their worldwide payroll. So they're trying. So they simplified it as much as possible into US dollars, which I found amazing. It was an LLC with some partners, some overseas. They had no idea on the fact that they had some withholding issues potentially on transferring overseas. And then again, and I don't know where we are with the quote, but that's what I found interesting. And he wasn't a young guy, the CEO, so I felt that he wasn't as old as me, but he wasn't that young.
Yeah, and that's a good, I mean, Jerry, if you think about some of the, I mean, I think that was a good description of the opportunity, but you think about there's a lot of seasoned people that are in and that have a lot of experience and knowledge that have transitioned into this space from existing businesses. And I gave an example before of a technology company that we're working with, but they pivoted their business. They used to be a gold repository, and then they changed their business. They went into supply chain tracking, now have created this token you know, for data security. So I think a lot of companies are thinking about, you know, their business model. And like Glenn mentioned, it's not only crypto companies, but it's also existing businesses. And then how do they, you know, intertwine this stuff within their existing business? I think that's the interesting part of the whole space, you know.
It really is. There's some sophisticated investors getting involved in this space now, is what I think. They put a lot of money into this.
Yeah, a lot of sophisticated people that are
And this guy was, he was sharp. He wasn't, he was just a sharp guy. So
Yeah, these people are very smart and
very smart. So,
At the end of the day, do you guys see a place for this inside an accounting firm?
well, I mean, I can take this, but I think that it's gonna, like I said, it's gonna impact every industry. Like when you think about accounting, right, and you think about on the audit side, the way we do audits, right, it's gonna impact that. It's gonna, when you think about the blockchain, you think about cutting cost and efficiency. It's gonna make audits a lot cheaper. It's gonna change our testing approach. It's gonna be focused more on controls rather than substantive testing. It's gonna allow us to look at complete populations versus sampling. We're going to need people that can analyze information and analyze data and really understand the client's business to advise, right? It may be an audit project, but the client's really looking for advice as part of that. So yeah, I mean, it's definitely going to have a big impact on our business, I think.
and with some of our fees, maybe we should sell a token to have access to us.
Brian, I was wondering if it changes the kind of people we look to hire. Are there people with different technical skills, maybe not as familiar with the audit standards, but managing the use of the blockchain and using that as an audit technique?
So important.
So Gabe, so that's a big issue that when we have our strategic planning meetings, we always come back to that. And right now we do have an outsourced solution, but clearly going forward, we need to know what type of person we need. And then it's not just about the type we need, it's finding that person.
Without a doubt.
There's not a lot of people that really have the expertise yet. But there are people that have a different background than we as CPAs had that are getting educated. And over time, we're going to see those people. There's no doubt about that, right? But that's a big conversation every time. If I've asked Brian once, I've asked him a dozen times, can you give me a job description for the type of person you're going to need? And it's a mind bender. But clearly, and I want to move to questions. Clearly, this has a big impact on the services that we're delivering and our ability to answer the questions and our ability as advisors to our clients. And I think that we have a team that at least is at a place where we can have those conversations, right? It's as good a team out there. And I do believe we're at the beginning of this. And I'd like to stay at the beginning, frankly, folks, right? In the past, we've been at the beginning of things and other people have passed us. I don't want that to happen here. I really believe we can be industry leaders, market makers, if you will. So anyway, with that, why don't we open it up to some questions? Take 10 or 15 minutes. Please, if you could just understand that this is about the accounting firm.
Glenn, do you mind if I chime in for a second? This is Fran Decker.
I don't mind.
Just something that Jerry said, I've been working with Brian and together on several crypto clients for the last couple of years. And there's a lot, I think Jerry kind of said it, there's a lot of firms out there that don't want to do this type of work. I've gotten crypto business from Baker Tilly because through one of my crypto companies that I do, they use Baker Tilly for their tax work. And I got to know one of the partners there. And when they get an audit opportunity, he refers it to me because he knows that Baker Tilly has made the decision right now not to do this. And I'm sure there's a lot of other firms out there that feel the same way. They're hesitant to get into it. And I think when, I know that people talk to other accounting firms and what other firms are doing, it's good to let them know that we do this. And I think, Glenn, you kind of said we're in the beginning stages. I don't totally agree because I think we've really jumped into this pretty well. I've worked with Brian. We do outsource. We've used some consultants that are fantastic. And, when we finalized the audit of FTX, I had a conversation with the CEO, who's one of the top guys in this space. He said to me, you guys did a great job. And we really feel that you're on the cut, your firm is on the cutting edge of this. And I was kind of nervous about losing the account because they're so big. I thought maybe they would go to one of the big firms, but they were happy and they saying, you know, they want to start the audit for next year. And I mean, I think we have really, I think Brian, through his expertise, through the consultants that we use, and, you know, I guess my main point is when you guys are out there and you're talking to other accountants and other firms, because we've also met other firms through our contacts that they don't want to do the audits. They may want to do the back office work or the CFO type of work, but they don't want to do the audits. And I think we've jumped in to this and, you know, we've put together a good team. Yeah, you know, based upon what Gabe, I think what you said is, do we need, you know, resources? Absolutely. We need to find people who understand this, and it's tough to find people. But we do have
So
some.
Fran, so
Yeah.
we want to get to some other people questions, but I think the points you've raised are good points. One, when I say we're at the beginning of this, I mean we're at the beginning of this, okay? Because we don't know where this goes, and it's going to be a whole lot bigger than it is today. It's changing very quickly. But I also believe that we're about as upfront in this process as any firm out there. And I do think your point of working with other firms is a fantastic idea. But I will tell you this, on the audit side, what I am learning is that it's labor intensive, and by nature labor intensive. When you're auditing a blockchain, it's even more so. And that we're going to have to develop or find some artificial intelligence that makes it easier to audit those blockchains. And Brian and I can have a side conversation about that. But that also takes investment dollars to create those programs. So let's keep going. And thanks, Fran. And by the way, Fran has been a big part of this and a big supporter in this area. Who else wants to ask a question?
I have a comment and a question. I know the IRS is involved with like G5 initiative with like Australia, Canada, and several other countries where they're looking at cryptocurrency, Bitcoin, all of these things sort of as schemes. So I foresee that there's going to be a lot more going on in tax controversy like we've already seen with some of this. And I know that IRS, a lot of their hiring right now, it's not all people who understand tax and the things IRS needs to know. It's a lot of IT people. They're hiring tons of people in IT who could do the data mining and all those types of things. And then my question, I guess, was for Brian. You mentioned that right now there's not any great way or mechanism and people have to track all of their transactions. And I was under the impression that there are all these different currency platforms that people could import their information into, like Token Box, Bear Tax, Crypto Trader or something. There's like a whole bunch of them, because I have one client who had Coinbase, and when Mike Brown and I went to work on that return, it was pages of gobbledygook with all these mining and the, you know, all the gas tax and the fees, all the things Jerry was talking about. It was all on this list, but it was pages and pages and pages. And the client can't afford to pay us to recreate this report. So I suggested that he retain one of these, you know, current, you know, conversion platforms, go pay for that, get the stuff converted. And we got back a report.
Yeah, no, there's
So-
there's various platforms out there, Luca, Legible, depending on the type of business, there are platforms that are out there. It depends on what exchanges they support, because each platform may support different exchanges depending on the cryptocurrency, depending on the blockchain. But yeah, there are a number of solutions. I think, you know, maybe the comment was really, I guess, people trying to do it in Excel and trying to do it on their own. And that's where I think it gets messy. You can do it, but depending on the complexity, you know.
Maybe we can make sure partners and all the preparers, like in our company, are familiar with a few of these these exchange, whatever, so that they can refer clients to them or whatnot. That would be
Yeah.
helpful, I think.
Yeah, no, and we do have those, and we actually have referred things over to some of those, so we can definitely you know, share those with you. But again, the solution may or may not work depending on the client, because it's so nuanced and there's so many different cryptocurrencies, and the technology is different for each because the blockchain is different and works. So it may be a fit, but we can definitely do that, because we have done that over the past, you know, few months.
Thank you.
I just have this is Marty. I put in the Universal Drive that many of you have access to, a whole series of articles. Mike, if you have other articles, you might want to supplement that, and either Jonathan or whoever is in charge of cryptocurrency, maybe Brian, can put those articles up on the up on our intranet. But there are articles by Forbes and the National Association of Tax Practitioners. They talk about the forks. So if you're into wanting to know more about it, we have the IRS rulings up on there. So we try to keep that current with just research as topical. There are 10 or 11 articles in there, and we collect them. If anybody else sees any great articles, let me know, email them to me. I will add them to the folder. And if somebody sets up a cryptocurrency tax folder up on the intranet, just let me know, and I will be glad to supplement it and provide that information. And I just will reiterate what Robin said on controversy. We're going to see more on this. I think at some point there's going to be some legislation that treats it as currency, but it may take another 5 years to get it. As long as it's property, as Michael said, every transaction you buy a Starbucks, you've also sold the cryptocurrency, and you have to track the basis. There is software to take care of that and to follow that through. And that's all I have. Thank you.
So what are we really gleaming here? Tremendous opportunity, folks, right? And it's from the tax side, it's from the audit side, it's from the advisory side, it's from tax controversy. Think about this. A whole new world of tax controversy. We can all help Marty make his numbers next year. So but really, this lives in an accounting firm. So anybody else with a question? Jennifer?
Yeah, I have a question. I am currently working with an artist in the NFT space, and I am having a bitch of a time getting insurance for the business. We bound some general commercial liability, but I'm having a hard time finding an insurance carrier that wants to insure the NFT piece of it. And I was wondering if someone could speak to that.
Have you spoken to Mark Specht?
I have not.
Okay, well, why don't you start there?
Okay.
And I will talk to Mark, because we definitely have some people we can reach out to.
Mm-hmm.
Okay.
And Jennifer, Beasley is in the internet cybersecurity space. Company will Beasley, B-E-A-S-L-E-Y.
Well,
Okay.
let's start with Mark Specht, because
Okay.
the whole idea behind this is we're an organization that's supposed to cross-sell and cross-market our services. And when we're selling insurance, Mark would be the place we would start. So I think that, but again, that just demonstrates all of the, quarterback and all of the opportunities in this new world. Any other questions? Comments? Lunchtime? Okay. I hope.
Comment that I hope we do a
What?
lot more of these. I think this is a great forum. I really enjoyed this in the last time we did it. I think it's very informative, and I think it's great when a handful of people are sharing tremendous information. So we don't have every one of us having to spend this much time to glean it, but this was really helpful.
Okay, so to that point, if anybody really ever has a subject that you would like us to organize one of these around, or a group that you'd like to organize one around, really just reach out. I'd be happy to assist with that. I hope that everybody found this informative. Okay, thanks, and have a great day.
Thank you.
Thanks.
Thank you.
Thank you,
Care.
everybody.
Bye-bye. Thank you.
Bye.